Today, what's in the wind for rates ahead? Hello again, it's Martin North from Digital Finance Analytics, where I've noticed posts covering finance and property news with a distinctively Australian flavour. Today, I'm joined by Peter Marshall from Mozo. Hi, Peter.
Hi, Martin. Great to be here today.
Well, I appreciate your time, and the Reserve Bank meets tomorrow, and we'll be chatting about the economy and rates. And you've just put out a release, which actually makes really interesting reading, which is that maybe deposit rates are on the way up. And the question, of course, then is what happens to mortgage rates?
Yeah, sure. Over recent weeks, we've been seeing a couple of ADIs, so deposit takers, start to increase some rates. Now, at the moment, it's only small players, it's on the margin, but they're the first real increases to deposit rates that we've seen for a very long time now. So my feeling is that we've reached the bottom of the rate cycle and everything is going to go up from here.
Right, for depositors, you mean? So, in other words, depositors can expect to see those meagre returns going to slightly less meagre returns.
There start to be some better deals around. But on the flip side, of course, mortgage rates are also expected to start heading up.
Right, now that's going to be very bad news for those with mortgages. Of course, the fixed rates have already been changing, so some of the longer term rates that were really cheap before have disappeared. Most of the banks now are signalling probably some rate rise, although actually I noticed that NAB did something on their investment loans just the other day to try and drag some of those in before everything changed.
Yeah, on the variable rate front in particular, there is still plenty of competition. Some of the providers that have the lowest rates around for variable customers have been cutting their rates even further. So I see that as a signal that the banks are prepared to slash variable rates. They can always put them up again later. But if they lock in people on a really low fixed rate now, they're stuck with that fixed rate until the end of the term. So if they take on variable rates, they've got an out card. They may only last for another 6 months or so, but it gets customers in the door for them now.
And there's a lot of that, isn't there? So the latest statistics that came out from APRA and the Reserve Bank today showed a significant spike in mortgage lending overall, and the total volumes of loans, I think, are also going to come up from the ABS data. So there's a bit of a race at the moment to try and right that business. And as you say, price is very much the driver of that. But they're also not wanting to lock themselves in for rates that could be a bit low for longer. So now the variable rates will be the hook. So what do you think then in terms of timing for mortgage rates going up? The term funding facility ends very soon now. That's the very cheap money from the RBA. So I think banks are going to be struggling to try and balance this. And I just wonder how quickly you think that mortgage rates could be on the way up.
Look, I don't think it'll take too long at all. The banks haven't drawn down all of that term funding facility, which suggests that they're not desperate for funding. But at some point fairly soon, they're going to have to look for an alternate source of funding. So whether that's local depositors or international markets, they're both going to be more expensive than the term funding facility, which is at a ridiculously low 0.1%. So I think everything is on the way up from here.
Yes, and that's the point. The 0.1% is ridiculous, as you say. If they have to go to the international financial markets, they'd be paying quite a lot more than they would for the current deposit money at the moment. So that's why we've seen the balance of funding switch over the last year or so. More of it's now actually related to deposit funding, which is why those rates now are going to be going up slightly, because they want to attract more of that. And of course, there are still some stavers looking for good deals, and many of them are coming off fixed rates for term deposits that were reasonable, and now they're struggling to find anything attractive at all. I mean, it's ridiculously cheap to, from the bank's point of view. So there is going to be a lot of competition. What do you think it's going to look like in terms of which players do you think will be leading the charge, and which will be following on the deposit rate of the equation?
Well, traditionally, the big banks have moved first on rate rises in particular. It's interesting because right now, ANZ has the lowest 5-year fixed rate in our database at just 2.24%. But I don't think that's going to last. It's a great play by the bank to put a great value rate out there, but it's really just to get more people through the door while that cheap funding's available to them. I think in the next 6 months, we're going to see a noticeably different mortgage rate market.
And how do you think that's going to impact the smaller players? Because I know that some of the credit unions have been struggling to try and maintain competitive rates with the big guys who really have started to exercise their muscles now. Do you think it's going to get better or worse for them?
Well, they're more likely to switch their focus to local deposits. And, one of the ADIs that we saw increase rates right across their terms just a week ago was a small credit union. So I think they'll be leading the charge. So if people are holding out for some better deposit rates, that will be the segment to keep an eye on.
Right, and going back to deposits, what's the highest rate that's achievable now for people on the sort of standard deposits?
For at-call deposits, the best rate it's 1.35% from ING, and the rates tail off fairly rapidly below that. If you want to get a term deposit rate, you're really hard pressed to find anything above 1% at the moment. But as I said, I don't think that'll stay the same for very much longer.
And that would suggest that if you were thinking of moving into a term deposit, you might want to just hold off for a little bit and see what happens, right? Because if rates are going to go up, then you might be able to get something a bit better later.
Yeah, absolutely. If you can take advantage of some of the conditional ongoing bonus rates that are sitting above the best term deposit rates at the moment, they're absolutely a great idea until the better term deposit rates do start to flow through.
Okay, very interesting. Well, obviously people can go across to Mozo and have a look at the various comparisons that you have there. You've got a very good database of different alternatives and options. And I keep saying to people, shop around. Don't just assume that the one you're with is the best one, right? There's the old apathy tax, right? It is worth shopping around, and that's true for mortgages and also for deposits. But you've also got to take account of the fact that if things are beginning to move, then it isn't just a static position. You've got to think about how it might play out ahead, and that might determine term versus call, and it might determine fixed versus variable for mortgages. So there's a bit of complexity to navigate.
Yeah, I heard some great words of wisdom once a few years ago. Someone told me that the banks never lose on rates. So I think it's worth keeping that in mind if you're looking at locking something in, particularly for a long term. You'll probably find that by the time you get to the end of the term, you may not be on the best rate available. So, a great strategy for managing that risk is to go split, do 50-50 fixed and variable, so that it gives you some room to move and take advantage of changes that might happen in your favour. Yeah,
good idea. And I think, flexibility, getting the right rate and getting the best rate is all what people should do. And like I say, if you don't do it yourself and you just roll over with the lender that you've got, they always win. Last question for today. Reserve Bank meets tomorrow. What's your expectation with regards to the cash rate?
I don't think that there'll be any change there. They may signal a slight shift in their expectation for when the cash rate's going to move next, but it'll be somewhere in the realm of what they've been saying. The next rise is probably going to be several years away. There's still plenty of slack in the Australian economy, not much driving inflation. So it's going to be a waiting game for at least a couple more years.
Appreciate that, and I tend to agree with you. I think that if there's any rate move, it will be a complete and utter surprise. They don't like giving surprises. I think you're right. They're sort of stuck there for the duration. But the point we want to make, and just to reiterate what you said earlier on, banks will be starting to move rates independent of what the Reserve Bank is doing, for the reasons of funding and for the reasons of competitive pressures and all of those things. So folks, time to shop around, go to those comparison sites, find those best rates and go grab them. Peter, I appreciate your time today. We'll make sure that the links are below, and we should catch up again down the track and chat about what's going on in the marketplace.
Yeah, that'd be great. Thanks a lot, Martin.
Thank you very much. Appreciate your time today.